Okay, more practice in less than 15 minutes. Today we're going to look at the CAPE Accounting 2 2022 Paper 2 Question 2. Alright, so let's get to that. Okay, so the first question in this on this Paper 2 Question 2 for 2022 was to compute the estimated service price of a project in this proposal. So what we have was that Allen and Smith, they're a professional services firm, and they have a job to complete, and so they're asking us to calculate the price of that job. So let's see. So I've set up the table, basically what we need and what was given. So for example, we were told that the partners think that a project would require 900 hours of professional labor, and they're charging $500 per labor hour. So we know that we got to calculate the direct labor. We were given some additional direct costs, and I have slotted them in. We're supposed to calculate the benefits for that direct labor. So we're going to calculate that as well. And then it says that last year the firm had a total of $680,000 in overheads, and the partners had logged 17,000 professional hours, and it's going to use an overhead allocation to put in the overheads, right? So that means that we're going to have to calculate the overhead allocation rate, right, to determine the overheads. So we're going to have to calculate that as well. And then, of course, the 20% markup. So let's first of all, therefore, calculate the direct labor. So the direct labor will be 900 hours times $500 per hour. So you multiply that out, and we will get 450,000. And then it says that the benefits for the direct labor is 75% of the direct labor support. Now the direct labor support is 60, so 75% of 60 is what we're gonna have to work out, right? So 60,000 times 0.75, or 75 over 100, and that will give us 45,000. And then the next thing we got to work out is the overhead costs. And the overhead costs, we said we want the rate, which is 680,000 divided by 17,000, which is about 4 17s are 68, so that'd be $40. So $40 times the 900 hours should give us the overhead costs. So 40 times 900, that's 36,000. All right, so that is the cost of the job, and then we're going to add on the 20% markup. All right, so 20% of this number is how much money? 122,190. All right, and that should give us the estimated price when we add these two things together. So let's add those two things together. All right, let me get 736.90. Let me check my mathematics to see if that my mathematics is correct, and then we'll go. Okay, I think I multiply around here. That is actually 122,900. All right, so there's your answer, 737,400. All right, so that is the answer to part A. Now part B of the question asks us, what's the difference between absorption costing and marginal costing? So, absorption costing is the traditional way of doing things. So, that absorption costing is that technique which treats both the variable and the fixed cost of production as product costs. And so it assigns the full expenditure that occurs in the production area to the cost per unit of output. On the other hand, though, the marginal costing is a technique now that only treats the variable cost of production as a product cost and transfers the fixed cost to the period cost of the business. So what will happen then is that when it's assigning the cost per unit, it will only use the partial expenditure because it's only going to use the variable cost and not the fixed cost. So therefore, I mean, if you were looking at it, the inventory under absorption would always have a higher cost per unit than the inventory under the marginal costing technique. Or the other question asks us, well, what is the difference between a cost center and a profit center? So let's bring my table a little higher. So a cost center is a section or a department of a business responsible for generating expenses or costs, either directly or indirectly. So that section of your business where the costs are generated or created, right? That's we call a cost center. Like your production department, for example, or your maintenance department, your computer services department, etc. Right? Those are cost centers. And on the other hand, though, whereas the profit center is a section or a department that is responsible for generating both costs and revenue, both expenses and revenue. So in other words, this section, its main purpose, of course, is to create revenue. By creating revenue, it incurs costs, like your sales department or advertising. All right. So generally speaking, those are the ideas that I can tell you off the top of my head are the differences between those pairs. I thought the marking looked a little generous, but all right. So let's go to part C of the question. And part C of the question asks us to. It says they're invested in a Modern Design Limited, a manufacturing firm, and they have shown us the overhead costs and the activity drivers and so for the next year. All right. And they say that they're working on this job QP3514, and they're asking for us to calculate first of all the cost per driver rates, the cost driver rates, and then calculate the cost of the job. All right. So we know to calculate cost driver rates, we just take the activity and divide it by the unit per activity. So let's come over to the answer sheet and let's do that first. So setups would be 650,000 divided by 800, and the maintenance would be 800,000 divided by 20,000, and the inspection would be 500,000 divided by 25,000. So let's do that division and get the answers. All right, so 650,000 divided by 800 is how much? 650,000 divided by 800, that is 812.5. So $812 per setup. The maintenance is, but this one look easy, 800,000 divided by 20, so that is $40 per machine hour. And the inspection is 500,000 divided by 25, so that should also be just $20 per inspection. So we got the rates, and now we can calculate the cost of the job as requested here in the last part of the question. It says using activity-based costing, which means that we will still have the direct materials and the direct labor, but we're going to use the drivers for the overheads. All right, so we already have the materials and labor. Those were given to us, 15 and 6. So I put those in. So let's just work out on the drivers. All right, so the setups, it says there were 4 setups, and the rate per setup is $812.50. So if I were to work that out, I will get an answer for that. So let's multiply that, and that is $32.50. All right, and then the maintenance, there is 120 machine hours, and it's $40 per machine hour. So therefore, we can multiply that. Well, that should be easy. 412 is 48. So that's 4,800. And for the inspection, it's 7 inspections at $20 per inspection. So 720s, 140. And so the answer, $29,190. So there you have it. 35 marks. I mean, this question was kind of generous in the marking because you didn't really have to do much. But that is the question. That's the answer. So thank you. Keep practicing. And if you like this, just click the like so we could get some more of these over time. Thank you.